The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 250. You get the Nasdaq up 85. S&Ps are up 68. We get quite a market, man. Everything's up quite a bit.
I'm going to blink, and the market's going to move 500 points. Let me blink. Okay, I blinked. Oh, no, we're still okay.
And just to give you an idea, folks, from the lows of the open in the Dow to where we are right now, it's about a $950 spread. Which is just incredible. So I suspect, you know, we were only down there for a second, but when I looked at this print, it's like, okay, so we had an open out here of 24,085.
Yeah, so it's like 500.
500, yeah. It's 500.
Yeah.
Amazing, 500.
But then if you look at last night, we were down almost 1,000 in the futures after it.
We were.
Now we're up about 250, let alone where we were yesterday. We had 900 down, 900 up in the span of about 15 minutes with that flash crash around like 3 o'clock or so. But hey,
totally.
So it goes.
Defined risk, folks. Let's go talk defined risk with our man, Mr. Kevin Hinks from TD Ameritrade Thinkorswim. And don't forget, you know, we talk about defined risk a lot around here. Bottom line, folks, every trading day, 11 to 12 Eastern Standard Time, you want to understand it, and there's going to be a lot more people that want to understand defined risk.
We'll talk about that VIX maybe. What's going on?
Oh, totally. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Still glad to be back on with you guys.
You picked a good day, man. Ride 'em. Let's go.
No doubt, man. I'm telling you.
Buckle up, guys. I mean, what you've seen in the market in the last 24, 36 hours has been pretty spectacular. Right? It's my contention, Tom, that if you look at a chart of the last hour of yesterday's trading, I think there was 2 flash crashes in that last hour.
With the flash bull crash upwards, too, right? I mean, amazing.
Well, today they might be for sure, but yesterday, in that last hour, they moved more than 1% twice in like a 5 or 10 minute period.
Yes.
And that tells me that was a computer-driven, you know, lack of bid trade going on right there. And what you're seeing from that is you're seeing a snapback here today.
Yeah, well, the bids get pulled. You know, Kevin, like in the press today, even on the way in, I was saying, you know, I'm gonna text Bloomberg actually, because everyone's talking about the whole VIX deal and they're blaming it on the VIX, right?
Yeah, yeah.
And
it's the VIX's fault.
Yeah, and it's amazing because what they really don't get, we do have so many ETFs, and I remember when this happened, the SPYs, the diamonds, okay, the Qs. When you get a sell down, well, they have to sell those, and that just begets the sell. And it's great when you're going up. When you're going down, that's a very fast deal.
And I got another point.
It feeds on itself.
It does.
And you have margin, 2 o'clock, 3 o'clock. That's when people start getting forced out of their positions. If you're a broker, you make the calls in the morning, and then 2, 3 o'clock, you got to sell the position. So that was there as well as part of it. Yeah.
And if you need any, and if you guys need any confirmation, whose markets are driving who. Right? Our market closed weak last night. You knew the foreign markets were all going to be lower.
Oh, yeah.
Right? And you saw that the Nikkei down 4.7%, the Hang Seng down 5 1/8%. You knew that was going to happen, right?
Yes. Yep.
So, therefore, you had to wait until the opening of our markets to see what really was happening with these overall markets, and then you saw it, right? A soft open and then just strength from then on out.
Yeah, and, you know, it's really, you know, how we bounce, to me, is going to be really important. You know what I mean? Yeah. Because it's done a huge amount of damage, there's no doubt. I mean, I suspect, you know, people haven't had, this is, to me, Kevin, is almost like, I remember we never had a correction like from 1994 to 96, and it wasn't even, we didn't go up as much, but because we were down so fast, people weren't used to it. Do you know what I mean? It's like, what happened here? And then that turned into turmoil for, you know, a good 6 months because of that. Do you know what I mean? People hesitant, you know, and so we'll see how this shakes out. But
and Tom O'Brien, I have a question for you. You know that this is not your or my first rodeo in markets like this, but don't you think that when you see a bull market, right, the corrections are harsh and quick and violent? Just like when you're seeing a bear market, the moves up in a bear market are harsh and quick. The fact that it was so violent and harsh tells me that it is short term, right? And the trend is not necessarily broken.
That makes the difference. There's no doubt about it. We'll see as to, I suspect, the trend. How this is going to shake out. The reality is we're back to October 8th. That's not the end of the world, man, because we've been up for 6 years.
Sure.
Exactly right.
Yeah. So, this is where, we're either going to be here, 6 weeks from now saying, oh, remember May 10th, the flash glass? Well, that was it. And it never looked back.
You're right. And what everyone should get used to, though, there will be a tone change, and then higher interest rates will bring a more choppy two-sided trade.
Yeah.
Right? So I don't think you should be prepared for it to go straight back up. There'll be two-sided markets, and there'll be moves up and down as rates go higher, right? So I don't think we should think that it's going to go straight up, but be prepared for more of a two-way trade now. That's why trading risk-defined is so important.
And that's a two-way trade is totally where it's at, too.
Right.
I mean, two-way trade, folks.
Traders will love that.
Yeah, the Bulls can make money, the Bears can make money, and it's real. I mean, that's
by the way, remember these brokerage houses, Tom, that have had trading numbers so low. We get a good two-sided market, a two-way trade, their trading numbers will skyrocket. Yeah,
there's no doubt, man. There's no doubt.
Yeah.
So we're going to find out a little bit later, folks, okay? They're going to basically call the VIX. This is the Credit Suisse product. And that's going to be a big deal because Tommy and I were just looking at the net asset.
The XIV, the short
XIV,
one.
yeah. We were just looking at the net asset value. It closed yesterday at 99. The net asset value that is Bloomberg showing is $5 right now. So, yeah. So bottom line, folks, is that they shot the VIX, worked for a couple of years and blew up in 6 hours.
It had about like $1.9 billion, I think, and I think that's based off the $90 number. So, it could be a couple $1 billion. Nothing dramatic that could be systematic in terms of $2 billion isn't the end of the world, but it's the end of the world for some people out there in terms of, it's for sure.
Yeah,
it's not the end of the world, but it's probably the end of that fund.
Well, yes, it is. It definitely is.
It is.
Yeah. And we'll see how the people that had that trade on, that's going to be over 100% loss, Yeah. Yeah, it's wild. Listen, folks.
There's a reason, Tom, that the cliche is buy low and sell high.
Oh, my God, I'm telling you, man.
And that defined risk. How about it, right?
Exactly.
I mean, it works every time until the last time, when you're over-leveraged.
And, I can't wait to hear. Remember the guy that we were talking about, a guy, a woman, whoever was kept rolling those VIX forward, okay?
Yep.
And I hope whoever it was had them rolled forward this time.
Sure.
You know what I mean?
There's an old saying in the pits, Tom, if you're trading like that, you're just borrowing the money.
Yeah.
Sure. Right.
That's a fact. Yeah.
So what are you guys talking about today besides everything, Kevin?
Well, we had a lesson all planned, but what we've done is we've chosen to go much more agile and talk about these markets and the real-time lessons and real-time trades that we're looking at right now. We're going to constantly be updating, constantly going through the news cycle, and constantly looking at individual stocks, where their volatilities are, where they're trading, things like that. We're going to keep it real, current events, and
live.
There'll be plenty to talk about.
Right here, folks. Go to TFNN.com, hit Tiger TV. Kevin, you have a great one, a safe one. Of course, we look forward to the show in 45 minutes.
Great to be back on with you guys.
Thanks, Kevin.
Stay right there, folks. Tommy and I are coming right back. We get the Dow up 65, Nasdaq's up 30, S&P's up 47. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Wow, that was just quick.
I blinked during the break.
I thought
Dow down 140.
That it was a trip. Okay. Thought I was on the wrong.
Let's pull it up.
Yeah, I thought I was on the wrong screen here.
No,
seriously.
not. We're live, baby.
Okay, so
Dow down 150, Nasdaq down 24, S&P is positive by 25, and then
they were up 60 a second ago.
right as we came into the break, Dow was up 60, so 200 points. So jumping back into the XIV, right? So XIV is the Velocity Shares Daily Inverse VIX Short-Term ETN. Okay, closed at about 99, and it's putting the net asset value at $4. We'll see where this opens back up. Some of this could be skewed data as this got halted. But when, we'll go into the news because there are a couple of cool stories. So Credit Suisse sees irrevocable call notice, right?
Yep.
So since the intraday indicative value of the XIV on February 5th was equal to or less than 20% of the prior day's closing indicative value, an acceleration event has occurred. Credit Suisse expects to deliver an irrevocable call notice with respect to the event acceleration of the XIV no later than February 15th. Now, if we can go back in, let's try and find which one. We're at a... Where were we just seeing? Where were we? We had a good article up here. Okay. Let's see what this one's saying. Yeah, so here we go. The notes mirror the inverse performance of the SIBO Volatility Index, which on Monday soared the most on record and will be called on February 21st. The Velocity Shares Daily Inverse VIX Short-Term ETN, known as the XIV, dropped 14% during the session on Monday, and its net asset value plunged more than 80%. And that's the key part of that, right?
That's the key part.
Yeah, the net asset value is almost worthless compared to the $99 it's trading at.
Exactly.
Now, even though this is putting, and you made a good point during the break, that even though this is saying they'll be called on February 21st, okay, yes, if you had the capital to ride that down, maybe that you could, but most people don't. You know, when you're in something that's at $99, your broker is going to force you to sell it back out if that opens back up for trading.
So the next thing, you can see the bank has not suffered any trading losses related to the exchange-traded note. The company said in an earlier statement the Swiss lender was the biggest holder of the note with 32% at the end of the quarter, which had a market value of $2.2 billion on January 11th. now that's the bank is saying that they don't have a loss. The clients that own this, folks, is going to be dramatic, because what happens is this is a total blow up, and I suspect it's going to actually go over to the broker-dealer community too. So what end up happening is that if this is on margin and you get 50% up, that's still only, let's say, 1,000 shares. You get 50,000 up for 99.
Sure.
It's going to open up at 5,000.
Say that one again.
Well,
just
it's 99,000. Say it's $99. That's
$99. Okay.
Okay.
Yeah.
So let's just say we get 1,000
Sure.
shares.
Okay.
So
That's
it's
right.
99,000.
Call it
right?
100,000 for ease. Okay.
So you put 50 up in margin.
Sure.
Okay.
Sure.
Bottom line, this is going to open up at $5.
Sure, if it does, right?
And
you lose.
That's where the broker-dealer community is going to get hurt also.
Yeah. Now, keeping in mind, it only had, and I say only, there's much larger ETFs out there. If this ever had a balloon blow up, $2 billion is usually not the end of the world.
No.
But you're talking about hundreds of millions of dollars potentially in some brokers that are going to have to take that hit, along with having their investors being completely wiped out to cover the other half of that loss, right?
Exactly.
Yeah.
Exactly. Pretty intense.
It is.
And let's go over and we take a look at this E-mini for a second. Okay, so
and it will be interesting to see where it opens. Just because the net asset value is at 4, we know how these things are skewed.
That's
maybe
right.
it opens higher than that, and everyone tries to sell it, and it tanks again, or who knows?
Yeah.
Who knows?
Who
do we got?
Let's go to Paul in Plymouth. Hey, Paul, what's going on?
Hey, Tom and Tommy, how you doing? It's Tom.
It's Tom. I know him. Okay, beautiful.
What's happening, Tom? Besides everything.
Licked our wounds from Sunday, and hey, I'd like to talk about this TVIX. What do you guys think about this?
Okay, let's take a look at this. So you got, so the TVIX, this is velocity, 2 times short-term exchange traded note by.
This is also Credit Suisse.
Then hold it. Then you got to be careful here, because they're calling the VIX.
The XIV.
The XIV. That's the note provided investors with cash payment at scheduled maturity or early redemption based on 2 times the performance of the underlying index. Okay, so. Yes.
And just to put, because we've been coming, the fund percent premium is only 4.5%. When you're talking about net asset value right now, it says 22 though. This is where I get skewed. So right now, Tom, we're looking at it provides a net asset value, which now this is on February 5th, so this is yesterday. So it could be in correlation, because the VIX was up at 50 yesterday. Go to the VIX.
No, I'll do this twice. I just want to see if this was at 22 yesterday. Oh, there it is. Right? Is that 20? That's 15. No, it's only 15.
16. It reached.
Never got that.
Right.
Okay. So that would have been at the close there. Because what happens, folks, is that after the close, after the 4 p.m. close, the sponsors of this did come into the S&P market, and this is where this whole thing goes.
The VIX went a little crazy, right?
Yeah, covering their so that the bank wouldn't get hurt.
Yes.
That had nothing to do with the clients. That had, that's they're trying to get it to net asset value.
Yeah. I would be careful, Tom, only because this is a Credit Suisse short VIX product, and this is the double, and we saw what happened to the single short VIX product, and the net asset value as of yesterday was at 22. It seems like the high yesterday was about 15 or 16, so already you're getting some skew on maybe where that net asset value was. And, anytime that there's some unquantifiable risk, and I would say there's some unquantifiable risk in a double short VIX ETN with similar products getting called literally within the hour that we're talking about, that's a dicey situation. You're dealing with some risk that you kind of can't quantify there,
Well, this is the double long VIX.
Oh, it is short-term ETN. Okay, that's why it makes more sense.
Okay.
Now, let me see.
Yeah, no, it's a long one, but the point
makes sense,
the point would be the same, Tom. What happens is this: is that what you don't know it is unquantifiable right now because everyone's short and long, and that's closing down. So you don't know how this is going to skew.
And just that I'm looking at only net asset value, and that's where it gets dicey in terms of net asset value showed that it should have been at 22 yesterday, and it only climbed up to 16.
Right.
So that's a shame that if you were long, right, you didn't get all the appreciation that you should have got.
Right.
Meanwhile, you might be taking all the risks to the downside.
Right.
I didn't get nearly what I could have gotten. I was in it yesterday, but I got out in the morning there, and I wish I'd stayed in it.
But no, watch this. Watch this. You might have got, depending, percentage-wise, you might have got more than anyone else, and that's what Tommy's talking about. When the market really tanked, this should have went to 22, and it didn't. It only went to 15.76, I believe.
But I think that's what Tom's kind of saying. He didn't get what he felt he should have gotten.
No, but that's because he just got out early because he made a lot of money, right? Yeah.
Yeah, I got back in again, and then I got back out again too. So I mean, but the thing is, you know, it seemed to. I was watching that 1688. That number I have stuck in my head since the summer when I was playing it.
Just hang with us, all right? Let's dive into this more after the break.
Stay right there.
We got a lot of people for sure.
Tommy and I are coming right back. We got the S&P's up 34. We're coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 62. You get the Nasdaq off 14. S&Ps are up 30. We're talking with Tom from Plymouth. We're talking about the TVIX. So I guess the real thing that you want to ask yourself, Tom, is that if it's not going along, meaning of the net asset value, then that's, you know, that to me that would be a problem. You know, because you're getting in there hoping that it either goes one way or up. It doesn't matter. I'm just saying But in general, but if it can't follow the net asset value, you're not getting what you're supposed to be getting.
Yeah. Well, do you think there's more downside to this market? I mean, I think there possibly is.
Yeah, no, I think we're just at the beginning of this. I mean, I don't see us going down $500 today. I see what's happening here is that you have forced selling that's coming in. That's why this thing's jumping around so much. I think this will stabilize, and we'll probably get a, you know, an up market out here today. But that's just that to me is going to be just a.
He said, you know, he thought there might be a couple days of, you know, movement to the upside, and then let's see what happens, like, towards the end of the week. That's why I jumped in this morning.
Most times when this happens, right, when you get this kind of damage, you're not going to go totally right all the way back up. You're going to bounce around like this. Good trading on both sides of the market. So you've been doing this long enough. You just be quick. Then you normally go sideways for a bit because then it's going to get the bulls and bears all uptight. Okay, which way we're going to go. And, you know, we'll see. The way that we came down on volume, this looks to me like a monster ABC down. You know, if we do a nice counter trend bounce, you know, that'll take, you know, a few months. Then, you know,
I would just be careful too in the same way. I mean, yesterday at this time we weren't at any type of scary levels. I mean,
no,
you know,
we were up.
That's where we. I don't know if we were up. Were we? Market was positive yesterday morning. Yeah.
Yeah. The reason I know it is that when I left, when I left in the car. I left at 11 o'clock.
Let's pull it up.
And we were up until 11 o'clock.
Okay.
Right around this time yesterday.
Yeah. Right.
So that's the only thing, you know.
Like
it's
722.
Yeah.
I would, and as we come into the end of the week, you know. Do you want to be long for a weekend coming in?
Oh no, I don't want to.
Definitely
not going to be.
You know, it's
see that right there. What is that? 11 o'clock.
There you go. Yep.
Yeah.
So where were we at? 67, 83.
I would like to give Andy a shout out too, because he's the one on Thursday. I think he said he really liked the VIX, where the VIX was heading.
Yeah.
Sure.
And that's when I decided on Friday I'm jumping in. So
nice.
It's a beautiful thing.
Totally.
Yes, it is.
Cooking, brother.
All right, guys. Well, take it easy.
Thanks,
Okay.
Tom.
Let's we'll stay right with that VIX. Let's go to our man Paul in Nevada. Hey, Paul, what's going on?
What's happening, guys? How you guys doing today?
Doing great, man. Yourself?
Oh, man, I'm doing great. Thanks for taking my call. I really appreciate it.
Absolutely.
Thanks for calling.
Man, so yesterday I've been trading. I know Tom likes to trade the TVIX, but I like to trade the UVXY. To me, it moves a little bit better. But underlying is pretty much the same deal, and right now it looks like it's getting ready to go again. But last night I got that text message from CNBC that the XIV had crashed by 90%.
Yeah.
So I opened up my chart and I look at the SVXY, which is the opposite of this UVXY. It closed at 71 and it was trading at 1470.
Wow.
And I usually like to short that vehicle, but my question is this: do you think that it's gone? It's going to blow up? Because
this is what I heard this morning. Now this is the Pro Shares one, right? So the Pro Shares, this is halted, but the Pro Shares come out and said that they are not going to. Here it is, right here.
Sure.
So Pro Shares announced today that performance on Monday of the Pro Shares short term was consistent with the objective and reflected changes in the level of the underlying index. We expect the fund to open for trading today, and we'll be intent on continuing to manage the fund as usual. Now, they said that when I was on the way in. I heard that, but yet the stock's not trading.
I was just going to say, I mean, that's a PR release, just to keep things in perspective, okay? I mean, of course, you know, they're going to say everything is good until they say they're going to recall it. Just to put things in perspective, right, Paul? I mean, keep that in mind, you know? I mean, they're never going to say, hey, we might call this depending how the day goes, because that would obviously inspire it to go haywire. They would, and it's approaching, what time is it? It's past 10:30 and it's still halted.
What is that symbol again?
SVXY.
SVXY.
It's a trip with this UVXY. It opened up this morning, sold off pretty much all the way down to the 9 EMA on the daily, went a little bit lower. And then this candlestick is just looking ridiculous. And so, this candlestick turns green.
And well, look at this, Paul. As you're looking at this, and there's no doubt you had saying that last night that it was trading at 14. This closed at 71. They're saying that last night the NAV was $3.96.
I mean, that looks identical to
it does. the 90% loss on the other one.
Yeah, the XIV.
Right.
So if the underlying fundamentals look similar to the USB one that just got recalled, I would at least be wary that you got to keep that as a possibility, even if they're coming out this morning and saying that they're okay. It's something you got to keep in mind, man, at least to realize that risk is definitely out there when you're talking about a similar product, similar net asset value, similar collapse in terms of price. And I'm sure these are quite complex instruments, and so who really knows when they put out a press release like that?
So some hedge funds might be blowing up here in the next couple of days. I mean, if they're really stacking on the short VIX.
Yeah, I mean this one had a market cap of about 1.3 billion. The XIV had about 1.9. Yeah, it was 1.9 as it closed yesterday. So you're still only talking about $3 billion, and a lot of that, at least half of it's going to be absorbed by the investors in it. Whether that is some of the hedge funds, but then the brokerages might have to be picking up the other half of it. Right. But it's not something that you're talking about, an SPY or something that's just mammoth.
And I think a lot of it, I don't know if a lot of us had seen this story. This was about an individual trader. It was quite a story that he's made millions, and what the story was about is that, he just kept selling this for the last 6 years. And
it works every time till the last time, right?
Right. And I can tell you that if he was in this, then he's broke.
Well, it's like when you're risking 90% to make 10%, risking 95% to make 5%.
The event come.
That's that's those types of money management deals. Are you really able to manage the storm when you lose 95% trying to make 5%? Or what happens, right? You lose 180%. You lose 200%.
Right, and you've leveraged up over the years.
That's it, right. You're risking 95% to make 5%. Right. Meanwhile, you have 200, 300% margin in that trade, so you're really risking 98% to make 2% or 5%.
Exactly. So.
Wow. It's going to be wild because yesterday, like I like to tell you guys all the time, I learned so much from TFNN. I'm still just a total grasshopper, but I mean, man, I was watching the 15-minute chart of the Dow yesterday when this thing started breaking down, trading the UVXY, and that move, when it just totally collapsed down 1,600 points, was the most amazing thing I've ever seen in one day.
Yeah. I was texting you at 3 o'clock. I did the 3 o'clock update, and I think the first text I sent was down 750, and in the span of 10 minutes, right, we're texting back and forth down 1,500. It was that amazing, I know.
Wow.
Cooking, brother.
Oh, all right. Well,
thanks for the call, Paul.
Take care, guys. Have a good one.
Have a great one, man.
Stay right there, folks. We'll come right back. We got the Dow down 200, Nasdaq's down 60, S&Ps are up 14. We'll come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now down $1.60. You got the Nasdaq off 44. S&Ps are up 19.
Can we jump to the actual VIX for a moment?
Yes.
So talking about the Den back at 45 as this market kind of oscillating around. 37 is posting right now. Crazy numbers, man. Look at that bar.
Look at that.
Look at that bar. So we're above 50 as the market kind of climbed. I bet to. Can we go IGPO?
Yep.
Yeah, let's get in here. Yeah, there you go. So we're above 50 pre-market. We open just above 40. As the market gets that pop from being dialed down like minus 500 to positive territory, VIX spikes all the way down to 20. From there, we get a jump back up to 37 as the market goes negative again.
Pretty intense.
I would just be really wary of trading those double products, you know. And I mean, they're all halted right now. You shouldn't, you know, you just that's you're dealing with dynamics that you can't quantify, you know. I like to be able to quantify all the variables that are in play, and you know it's a shame when you're risking for a reward, right? But you might not be rewarded for everything you think. Meanwhile, you might be taking on more risk than you even think.
Right. Let's see if we can get. We're just trying to get a couple more stories for you. The catalyst. Let's see. Yeah, it is effective. Okay, so we got to read this one. Okay, the avalanche of volatility pouring down on investors took another victim Tuesday with the liquidation of a newfangled security at the center of the storm. It remains to be seen if the move will stabilize the market that has already seen a $3 trillion in value.
And that's just the markets in general. $3 trillion. Not talking about the VIX. Yeah.
While U.S. securities conduit questions remain over how a security that quickly became a favorite could enact enough stress in today's plumbing that it shook the markets from New York to Tokyo. The catalyst has been an unprecedented move in the CBO volatility index that has roiled the market, roiled the market for exchange-traded products
tied
to the fear gauge. Credit Suisse said a spike in VIX futures will force it to liquidate the exchange-traded product that moves in the opposite direction, effectively wiping out a fund whose market value had topped $2 billion 3 weeks ago.
And to put it, you know, top $1.9 billion 24 hours ago.
Right. So what they did here, so this is
this is the XIV that they're talking about. Yep.
Yep. So what happened is that down. So what I'm getting out of this is that they knew this last night because as they were buying back that whole thing, they would have went into a negative position if they didn't buy it back. And so they had to buy it back, and they knew that's it. I'm done. You know, we lost 90% of the fund, but we covered the bank, okay, and that's their only responsibility, really.
Sure.
But when the people that own that, when that opens today, then it's trouble in paradise.
So betting against volatility has become a popular money-making strategy. Of course it has, as the market just climbs up and the VIX stays at like $9, $10, right? In the years since the financial crisis, with banks and other financial companies offering a plethora of short vol products. We've talked about a few of them already today. But exchange-traded notes and funds that give investors a quick and easy way to entering the trade have also been criticized for their risks. BlackRock has been calling for regulation that would clearly spell out the dangers associated with such inverse and leveraged exchange-traded products. Credit Suisse is buying back the Velocity Shares Daily Inverse VIX, this is the XIV, which it issued and is known by its trading symbol XIV. The ProShares Short VIX Short-Term Futures ETF is meanwhile expected to open for business on Tuesday. That's the one we just talked about, which was the one that started with the S that we were talking with Paul about, which manages the Velocity Shares notes, which mirror the inverse performance of the CBOE VIX, will be called on February 21st, the bank said. The XIV dropped 14% during the session on Monday, and its net asset value plunged more than 80% in late trading, according to data compiled by Bloomberg. Credit Suisse said it's redeeming early because the indicative value of February 1st equal less than 20%. We kind of discussed that. I'm sure that's in their terms of service or whatever it is that they are able to call it with certain situations. And you know, these financial companies, they give themselves all the latitude in the world to do whatever they want in their terms. The bank has not suffered any trading losses related to the note, the company said. The Swiss lender was the biggest holder of the note with 32% at the end of the third quarter, and they had about value of $2.2 billion as of January 11th. Yeah.
And so what we're talking about, too, folks, we're not talking about the just leveraged product. We're talking about the VIX leveraged.
Yes.
And non-leveraged.
This is just doing with.
This has specifically to do with the spike in volatility, and everyone was on one side of the trade, basically.
Yeah.
You know, so pretty intense, no doubt.
Yeah. I mean, the VIX saw a spike to 50. If you said, you know, last Thursday that the VIX would be at 50 by Monday night, seriously, nobody would believe you, or they'd be sweating bullets as to say what the heck is going to happen for that VIX to hit 50 in the span of 72 hours. But we saw what happened. I mean, you know, the Dow trading curbs come in at, I believe, 7%. And the Dow at 1,500 negative yesterday was at 6%. I mean, I saw a print that was at 6%. We were that close to curbs. And that was when it was only down 750 points as of 3 o'clock. By 3:10, we're at 1,500. I was sitting in the office hitting the refresh button over and over, and right then, you know, kind of turned. And what was remarkable was it went from 750 down 1,500 in the span of, you know, 5-7 minutes, and then it was right back up there in another 5-7 minutes. So you had, you know, 800 down, 800 up in the span of 15 minutes.
And then it fell apart again.
It did, right? And then,
If we bring this product up, you know, you're going to see that there's a spike here, and that must have been August of 2015.
August of 15, yep.
The difference was that it took 3 or 4 days versus 1 day here.
Yes.
That's what it looks like.
Yes.
You know, to hit the same.
There was still, I was just, if you look at, I mean, just because these are dailies we're looking at, correct? Is that what we're looking at?
It's hard to tell. Where
are we? 5 year.
It says
we're looking at we're looking at dailies. I can see them clicking across. So these are dailies. So in that 1 day though, which is August 21st, we did go from 20 to 28. Wait, that's not the day. Where are we? Come on. Can we zoom in here? How do we? We can get in.
Yeah.
That'll help a little bit. There we go. So August 24th, 28. The open was 28.
Okay.
Nope, that's not the day. Come on. There we go. The open was 28. The high was 53. So it is always that there's 1 day that all hell breaks loose, and it went from 28 to 50. But remarkable. Can I just, before we go back, how do we, I want to go back further. I want to go back, there we go. I want to go back, let's put it on a weekly 10-year.
Yeah.
Because you can see that very seldom, now there's that day that sticks out.
Yeah.
But we were not above 50, oh no,
Look at the crash.
That's it, you have to go back to 2008.
Right.
Only once in the last 10 years did we climb above this level. So perspective is important, and that is quite a spike, man, because even in 2011, we're hovering around 42. 2010, same deal, right around 42, 40, maybe up to 50, where we're reaching. So that's not updating. But either way, we weren't above this 50, you can see. Yeah.
And 89.
Yeah.
89 in the crash.
And that was, you know, percentage-wise, so Dow yesterday was the biggest point drop ever.
Yeah.
But percentage-wise, we're not even close to put things in perspective. I mean, I think the 87 crash, we lost about 22%.
In 1 day.
22% would be a drop in the Dow of 6,000. Just, you know, that's where, so perspective is always important, yeah.
877-927-6648. Stay right there, folks. Tommy and I are coming right back. We have the Dow down 12, Nasdaq's up 7, S&Ps are up 32. Coming right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. And folks, don't forget, no matter where you're listening, we got swim lessons coming up next. You heard Kevin. They're going to be talking about defined risk. They know volatility, I would say, better than the market out there. And
Bisect and dissect,
to get it really explained. Totally. And because what I suspect they're going to also do, folks, is, which is pretty cool. I just saw one of the tigers in the den. Talking about that the calls, even you could what happens in a high volatility like this morning is that you could have a position that went against you and it's actually worth money because the volatility has got so high. That happened. That happened in the '87
when
crash.
When you're talking about options, there's going to be some volatility priced in there. So
exactly.
Yeah, even if you were long the market, right?
That's right.
Your intrinsic value, your value side's going down. Your volatility side is shooting through the roof.
Went through the roof.
Well said. So I just want to bring it up this month. So we got a Tigers Den open house. We had this planned before even the market went haywire. Great time to get into the den. So normally you got to pay up front. All the products we offer come with a 30-day money-back guarantee, but you do have to pay up front. And what we've done for February, open it up, Tiger's Den open house. You can get in there. 30 days, completely free, pay nothing while you check it out. You'll get access to the den. We got a bunch of cool people in there. Man, talk about a great time to get some conversation. Bunch of traders talking about everything in between the market, talking about the VIX. So you can get in there, get 30 days free if you've ever had a free trial before it's opened up again. So I encourage people to check it out.
Go tell all your friends, folks.
That's right.
Do us a favor.
Get in that den.
Go out in those trading rooms and go tell your friends to come on over. We're going to have a field day.
So the last thing we wanted to bring up, so we've repeatedly been saying Credit Suisse was the largest holder of the XIV with about 32%. And this is kind of a cool chart that just kind of goes through who the other big players were. And you can see nothing too dramatic over about 3%. You got Deutsche Bank, Morgan Stanley, Citadel, but nothing dramatic compared to the 32%. So nobody's going to get their legs cut off for the brokerages. But there will be investors for sure.
Yeah. Stay right there, folks. We got swim lessons coming up next. Of course, then Steve Rhodes, Dave White. I'll be back this afternoon. Andy Heck. Thanks, pal.
Thanks, Ben.
Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.